Something strange is happening in one of the most important waterways on Earth. A ghost fleet, visible only through digital eyes, has appeared. Satellite tracking data shows that dozens, and possibly more than 100 ships, have slowed down, diverted, or stopped near a narrow stretch of water between Iran and the Gulf states. They linger in the open sea, their engines idle, their crews waiting. At first glance, it might look like a simple shipping delay, a backlog in a busy world. But this location isn't just any shipping route. It is the heart of the global energy trade. It is the Strait of Hormuz. Nearly 20% of the world's oil and a third of its liquefied natural gas passes through this single corridor every single day. It's a torrent of energy flowing from producers to consumers. That means what happens here doesn't stay here. A tremor in Hormuz sends a shockwave across the entire global economy. So the question is, why are ships suddenly hesitating to move through one of the busiest oil routes on the planet? What unseen force is holding them back? To understand the situation, you first need to understand the geography, the raw, unforgiving landscape of power. The Strait of Hormuz is only about 21 miles wide at its narrowest point, a tight bottleneck between the coasts of Iran and Oman. Shipping is restricted to two narrow lanes, one for inbound and one for outbound traffic, each only 2 miles wide. There is no room for error. Every day, massive oil tankers, some stretching longer than 3 football fields and carrying millions of barrels of crude oil, navigate this corridor. They sail from the colossal ports of Saudi Arabia, the UAE, Kuwait, Iraq, and Qatar. Those tankers then supply the unquenchable energy thirst of Asia, Europe, and beyond. Countries like China, Japan, India, and South Korea depend on this lifeline. In other words, this narrow waterway acts like a vital artery for the global energy system. But arteries become dangerous when tension rises around them, and the pressure here is building. Recently, tensions in the region have escalated to a near boiling point. Military activity in the Gulf, from naval drills to drone surveillance, has drawn intense attention from shipping companies, insurers, and governments worldwide. The waters are becoming crowded with more than just commercial vessels. When risk rises in a place like Hormuz, the first reaction doesn't come from politicians in press conferences. It comes from the cold, hard calculations of the shipping industry. It comes from a single line item on a balance sheet. Risk. Shipping companies, headquartered in cities thousands of miles away, like London, Singapore, and Athens, begin rerouting their multi-million-dollar vessels. Insurance premiums for tankers, underwritten by giants like Lloyd's of London, suddenly skyrocket. War risk clauses are activated. The cost of passage is no longer just about fuel and time. Some captains, receiving new orders, slow down their vessels or anchor in safe zones, waiting for naval escorts to guide them through the treacherous passage. And suddenly, traffic that normally moves with the precision of a Swiss watch begins to stall. The artery is clogging. That's exactly what observers have noticed. Ship tracking platforms, using data bounced from satellites, show clusters of vessels waiting, diverting, or moving with extreme caution in the surrounding waters of the Gulf of Oman. This isn't happening because the route is completely closed. A formal blockade has not been declared. It's because uncertainty alone is enough to change behavior on a global scale. And in the world of global shipping, uncertainty is one of the most expensive commodities. Even a small disruption in Hormuz can trigger disproportionate ripple effects across the energy market. Oil traders in New York, London, and Tokyo start factoring in this new risk. Algorithms begin to calculate the odds of a major incident. Futures markets, which bet on the price of oil months from now, begin pricing in the possibility of significant delays or a supply shock. The price ticks upwards. And suddenly, headlines on news channels and financial papers start asking the same urgent question. Could this become a bigger crisis? Are we on the brink of another energy shock? Historically, the Strait of Hormuz has always been a flashpoint. Its history is written in conflict and confrontation. During the brutal Iran-Iraq War in the 1980s, the region experienced what became known as the Tanker War. Both sides attacked oil shipments, and hundreds of vessels were damaged. The world learned how vulnerable this choke point was. Even in recent decades, tensions between Iran and Western powers have repeatedly led to confrontations involving commercial vessels, from seizures and boardings to outright attacks. The scars on the industry run deep. Because of that history, any unusual activity in the area attracts immediate and intense global attention. But here is the important distinction for the current situation. Right now, what we are seeing is not necessarily a full blockade or an open war. Instead, it is something more subtle, more modern. It is heightened caution, a digital ghost fleet born from risk algorithms and geopolitical anxiety. And sometimes, in a deeply interconnected global economy, caution alone is enough to slow global trade to a crawl. Imagine hundreds of billions of dollars in energy cargo moving through a corridor where the margin for error is razor thin. Shipping companies, and the corporations that own the cargo, are not willing to take unnecessary risks with their assets, their crews, and their reputations. So they wait. They absorb the cost of delay, hoping for clarity. They reroute, They send their ships on longer, more expensive journeys, sometimes around the entire continent of Africa, burning more fuel and adding weeks to their voyage. Or they move with extreme care, under the watchful eye of naval patrols. The result, traffic patterns begin to look strange on the map. The fluid dance of global trade becomes a hesitant shuffle. Clusters of ships appear where they normally wouldn't. Tankers pause for days, becoming floating storage facilities, and analysts in government and private intelligence firms begin watching their screens with growing concern, because even a temporary slowdown in this corridor can directly influence oil prices worldwide, and oil prices influence almost everything else in our modern world. The cost of transportation, from the fuel in your car to the cost of shipping goods. The cost of food production, which relies on fertilizers made from natural gas and diesel for farm equipment. The cost of manufacturing, as factories need energy to operate. Ultimately, it fuels inflation, affecting the price of everything you buy. This is why events in the Strait of Hormuz, a place most people will never see, often trigger global attention so quickly and so intensely. The world economy may be digital, running on fiber optics and cloud servers, but it still runs on physical energy, drilled from the ground and transported on the sea. And that energy still travels through narrow, vulnerable choke points like this one. So what happens next? Where does this lead? There are several possibilities, ranging from a quiet resolution to a global crisis. In the best-case scenario, diplomatic channels open, tensions ease, and shipping patterns return to normal. The ghost fleet vanishes as quickly as it appeared. In another scenario, companies continue operating cautiously, accepting the higher costs and delays as the new normal. But the route stays open, a fragile tense stability. But if instability were to increase significantly, if a ship were to be attacked or a mine detonated, the consequences could ripple across markets with terrifying speed. That's why analysts are watching several key indicators. First, tanker movement data, watching for any sign of a complete stop. Second, insurance costs for ships, a real-time barometer of risk. And third, the military presence from major powers, like the U.S. Fifth Fleet, tasked with protecting these vital shipping lanes. For now, ships are still moving. The artery is not severed, but the unusual patterns, the digital ghost fleet, are enough to remind the world of something important. Global trade may seem invisible, a seamless flow of goods across the planet, but it depends on very real, very physical, and sometimes very dangerous locations. And sometimes, those locations become the center of global attention, holding the world's economy in a delicate balance. The Strait of Hormuz has always been one of those places, and when ships begin slowing down there, the entire world holds its breath and starts paying attention. Thanks for watching.